Konnichiwa. So the topic this time is which electricity price plans are US customers choosing? And I get asked this quite a bit by the Japanese retailers and PPSs because in Japan, in the early days, most retailers are offering customers pretty much the same plans month to month. Now, in the US market, in the early days, retailers also offered more or less what Japan retailers offer month to month prices. Now, the customers, they did switch and they did leave the utility, but most stayed on the tariff plans. And the reason being customers who stayed on tariff just didn't see the benefit of switching. Now, as retailers in the US got better at hedging and risk management, which I think they will in Japan as well, they started offering two new plans that were popular. First, for the low voltage customer, was a 1 year fixed price, which actually has better margins and is easier to manage than month to month. Second, for the high voltage, is a block and index. Now, once these plans rolled out, the switch rates increased and more customers left the utility and moved to retailers. Now, as the market matured, creative price plans were introduced to entice more customers to switch. Things like free weekends for low voltage, green energy for both high and low voltage, which I know is offered in Japan. A common practice in low voltage is a 3-month low introductory rate to entice customers on price, or a 2, or even a 3-year fixed price for low voltage. Now, in high voltage, a newer futures market tied plan called trigger pricing was introduced, and that become somewhat popular. Now, today, in the mature US market, the most popular plans are 2 or 3-year fixed price for the low voltage. Very few customers stay on month-to-month pricing. Secondly, for the high voltage, it's block and index, which is also easier to manage and more profitable for retailers. And of course, the growth in the renewable energy continues to skyrocket those numbers in both the low and high voltage. So I hope this information was helpful. Sayonara.